If you want to see more detailed images, videos, and the full article, check the link in the description. ING, a leading Australian savings account provider, faces scrutiny for its handling of promotional account bonus rates. Despite regulatory advice recommending proactive warnings to customers nearing the loss of these bonus rates, ING has reportedly not implemented real-time alerts. This practice, mirroring strategies employed by other banks, allows institutions to access customer funds at minimal cost, effectively financing other business operations, notably profitable mortgage portfolios. The Australian Competition and Consumer Commission's 2023 findings revealed a concerning statistic: 2 out of 3 savers are missing out on bonus interest. This raises the question, as interest rates potentially fall, could Australia be on the verge of another housing market boom, fueled by this overlooked financial practice? The ACCC's recommendations included mandatory real-time alerts to customers at risk of breaching bonus conditions, coupled with annual notifications prompting consideration of bonus eligibility and potentially more suitable financial products. While an ING spokesperson confirmed that customers are notified of interest rate changes and provided with an in-app feature to check eligibility, they declined to address the lack of real-time alerts as suggested by the regulator. The spokesperson did not disclose the percentage of customers receiving the full advertised interest rate, stating only that the in-app eligibility checker is a popular feature. ING's advertised rate currently stands at 5% per annum, one of the highest offered to Australian households. However, the base rate for those failing to meet bonus criteria is a significantly lower 0.5%. To qualify for the bonus, customers must deposit $1,000, execute at least 5 transactions, and consistently increase their savings balance each month. The consequences of non-compliance can be substantial. For instance, a customer with a $20,000 balance could see their monthly interest plummet from $80 to a mere 80 cents by missing a single requirement. The bank justifies this structure by asserting it encourages active financial engagement, and that rate adjustments reflect broader market dynamics. A Guardian Australia report highlights the case of an ING customer who unknowingly forfeited substantial interest. This customer, despite meeting monthly requirements in their ING Savings Maximizer account, was unaware that bonus interest applied only to the first $100,000 of the balance. With their savings exceeding this limit, reaching $185,000 by 2025, the customer estimates a loss of approximately $4,000 in annual interest. Their statement, "It just had never even crossed my mind that would be something I had to be aware of, and obviously I never received any notification," underscores the potential for significant financial losses due to a lack of transparency. The customer further expressed frustration with the bank's communication, noting that they were notified about almost everything except the substantial portion of their savings earning minimal interest. While ING's spokesperson declined to comment on individual cases, they maintained that the $100,000 bonus rate limit is clearly stated upon account sign-up. This incident, however, highlights the inherent complexity of many savings accounts. ING's practices are representative of a wider industry trend towards low base interest rates, a trend increasingly common in bonus accounts. CanStar data shows a typical bonus account offering 4.2% total interest, with only 0.2% representing the core rate. According to Finder, conditional accounts, which have surged in popularity since 2010, now constitute over half of all savings options available. These accounts, however, have become significantly more intricate, featuring drastically lower base rates, observes Rachel Westell, a personal finance spokesperson at Mozo. She poignantly illustrates the consumer's dilemma: if you don't know the rate or the hoops you need to jump through, how are you supposed to get the bonus? It's like studying for a test without knowing the subject. In 2024, Labour MP Daniel Mulino, in a report advocating for stricter savings rate regulation, recommended a notification trial. Following this, the Albanese government pledged to enhance awareness surrounding bonus rates. Mulino, now Assistant Treasurer, confirmed ongoing collaboration with banks to implement reforms. The major 4 banks each claim to employ push notifications and emails to assist customers in qualifying for bonus interest. Olivia McCardle, Macquarie Bank's head of deposits and payments, identified the complex monthly conditions as the primary hurdle for Australians seeking to maximize their bonus interest earnings. Mozos was tell advocates for mandatory customer notifications across all banks, emphasizing the need for improved transparency. She argues, Australians deserve a heads-up when they're about to lose a chunk of their returns, further noting that banks lack significant incentive to act proactively, as missed bonuses directly benefit their bottom line. The issue remains a critical one for consumers and regulators alike, highlighting the need for clearer communication and greater protection for Australian savers navigating the complexities of the modern banking landscape.